If we look back at history, which you do as well or better than anybody else out there, how often does the market, the S&P 500, go up for the year when January? Is this January barometer thing a real thing?
I think so. It's something that Yale discovered. My father started the almanac back in '72, along with the Santa Claus rally at the same time. And it's not perfect. It's got about 85% accuracy ratio since 1950 for major errors, including flat years where the market was up or down, maybe 5% or less. 75%. It's still, or it's 739 batting average now, 74% basically. But the key is when we add in the Santa Claus rally, the last 5 days, first 2 days, the first 5 days of January, early warning system, and the whole month barometer. Since 1950, we've got 27 out of 30 up years following an up trifecta. So we're 3 for 3. Average gain in those years is 17.1% for the S&P 500. Pretty strong indication.
Okay, I'm going to repeat that because, listen, if you're into history out there or market data, if we end December, fairly good. If we start January, fairly good. And if we end January higher.
Yes.
The last 27 times out of 30, the year has been up.
Been up 17% on average.
Those are better odds than the under in last night's game.
Somebody knew that,
Who knows?
But
is there anything out there that makes you worried? Technically,
yeah, I think
the earnings, how they've come in, the political situation, trade talks.
Technically, I'm concerned about the trend line bumping up against the 200-day moving average. I think we've got some resistance there across all the markets. Politically, we've got issues. Trump, I think, tacked to the center just a touch. It would be nice if either China...
Tomorrow night will be a tell with the State of the Union.
Tomorrow night's very important.
Does he send any kind of an olive branch out to the Democrats? And this is not a political show, but does it matter for the equity markets if he does
I think so. Part of the reason the January barometer works is because the State of the Union is usually in January, and we get the nation's agendas and priorities set by the president in the month of January. So that could be, an indication as well. I mean, you could look for some State of the Union indicator what happens to the market around there. But usually, new Congresses convene in January. So I think it's very important what happens with the State of the Union, how it's perceived, and what the Democrats' response is. The whole thing. I mean, we're dealing with a precarious position with China trade, with the shutdown, with the wall. I mean, there's a lot of political things going on here.
I like the historical data. History is on our side from an odds perspective. But that doesn't mean everything. I seem to remember back in 2008, which we know was just a lousy year for the equity markets, we saw a couple of big rallies inside of what was a crummy market.
Very true.
That's a technical term, crummy.
It is technical. And we see this in bear markets. There's an expression, it's like a basketball bouncing down a mountain. It bounces pretty high up and down. I mean,
as it goes down.
As it goes down. It's not uncommon. But you mentioned 08, we had what looked like a pretty solid technical bottom there in November 08 with one of the worst weeks ever. And I think we had a technical bottom, with put call spiking up pretty well, market internals getting pretty ugly on the Christmas Eve crumble, as I've coined it recently. But remembering 08, we retested it, went a little bit lower in March 09. Not so much lower, percentage-wise, but still, I think there's a potential to retest that low.
I love it. But going back to this market, 27 out of 30 times when we've had what happened in December, January, and the month of January, we've ended the year higher.
Correct. 17% for the S&P.
Love it.